feel a little insecure talking to bankers or fancy businessmen about your handmade business? Maybe it's because you don't know all of the accounting terms or the words they're using. Or do you just want to talk about money more comfortably and make decisions knowing that you know what's going on in your business? Today, I'm going to introduce you to 5 accounting terms so that we can talk more about money more comfortably and all know what we're saying. Welcome to Explore Your Enthusiasm, episode 147 with me, Tara Swiger. Earlier this year, when I asked y'all to fill out a survey telling me what you wanted to learn more about in your business, 48% of you said profitability and paying yourself was the biggest struggle in your business. So first of all, good news, you're not alone in this. Everybody else wants to learn about this too, and you're not alone in not being clear or comfortable in talking about this. So what we're going to do over the course of this month on the podcast is we're going to talk more about money, profitability, profit margins, paying yourself. But first, we got to all get on the same page, so we're talking about the same terms. This is really vital now because there are a lot of people who talk about the size of their business without explaining what they mean when they say something. So if you hear that someone has a 6-figure business, what does that mean? We're going to talk about what that might mean, what people often mean when they say that, so that you can get clear both on, the thing that most matters is that you're clear in your own business on what your numbers are so you can make decisions. When you get familiar with these terms and then you get familiar with how other people are using these terms, this also helps you form your BS filter, because teachers and people with online businesses will tell you something. And once you know these terms, you can follow up and ask for clarification. So I'll tell you more about how to do that as we go on, but it's most important for your own business. Secondly, it's important for you to understand what people are saying when they're trying to sell you something by talking about the size of their business. This is something that I have a real problem with, people being insincere or unclear or vague. I don't like that. And I know that they're often using terms that maybe their own audience doesn't understand. So I want us all to be educated so we are using the same language. And so that going forward for the rest of this month on the podcast, we can talk about your numbers and your profitability and your paying yourself. And we'll use the same words and you'll know what those words mean. Now, before we dive into those terms, I want to tell you what is coming up so that you're prepared. So the Starship, which is my online community for makers and artists, and it includes access to all of my classes, including the updated and expanded Pay Yourself and Pricing 101 classes. The Starship, which has those classes in its library, opens next week. But I am not going to open it up to the whole world and do a big launch about it like I usually do, because I'm really busy making the Pay Yourself updated and expanded and shooting those videos. So I'm only going to launch it, open it to the people who have signed up to learn more. So if you are curious and you want to hear about it, you need to go to taraswiger.com/starshipbiz this week and sign up to learn more. I will introduce you to some of the Starship captains. I'll let you know if it's for you. I will also give you access to the video I'm recording this week about how I use my accounting software. So it's taraswiger.com/starshipbiz. And because I've added new and updated classes to it this year, this so far will be my second new or updated class in 2017, the price is going to go up when it opens again next time. So if you want in at the current price and you want to hear about it when it opens, you need to go to taraswiger.com/starshipbiz. All right, now it's time to get on with some accounting terms. So we're going to talk about 5 accounting terms that you need to know in your handmade business to run your handmade business well, make good decisions, and also filter through what other people are telling you about their businesses. Now, the first term, super straightforward, it's accounting. Accounting just means a systematic way of reporting and recording financial transactions. So not scary at all, right? Your statement you get from the bank, that is an accounting statement. It shows your outflow and your income. That's all accounting is, and it's a systematic way of reporting and recording financial transactions. So just so you know what's come in and what's gone out. Now, there are many ways you could do this. The most straightforward way that I used when I first got started is just to use a spreadsheet. I use Google Spreadsheets because it's free and I could access it from anywhere. And I would import PayPal because that's how I was making all my money, and that's how I was also spending my money in my business. I bought all my supplies via PayPal. I exported it from PayPal, opened it in a spreadsheet, split up my income and expenses, and could total them up and even categorize them within that. It's super straightforward. You can also use any of the so so many softwares that are out there. In an upcoming video, I am going to share the accounting softwares that my students who have handmade businesses, what they use. I am asking them and collecting their answers. And I'm also going to walk you through the one that I use and I love. And it's especially useful if you have multiple income streams, you don't do invoicing, and you use different accounts to actually spend money in your business. Now, I'm going to send that video to anyone who signed up at taraswiger.com/starshipbiz in the next week. If you're signed up there, or you've signed up previously to hear about the Starship, you will get that video sent to you automatically. So that's all accounting is reporting and recording your financial transactions in a systematic way. Now, people get confused about accounting because they think that it does have to do with how you file your taxes. The more on top of your accounting you've been throughout the year, the easier it'll be when it's time to file your taxes. However, I want to make this clear. The IRS doesn't care about how you're doing your bookkeeping. So bookkeeping is just like you updating your accounting. They, though, want you to, and this is true in the US, I'm sure it's true everywhere else, they want you to keep track of the specific categories of your expenses and of all of the money you've brought in. But that's what they want. They want all of the money you've brought in, and they want your expenses categorized in a few different categories. That's the IRS. I'm sure that it is similar when you pay taxes around the world. You guys will have to let me know if any of that's not true. But for you international people. But so accounting is just a systematic way of reporting and recording that. As long as you do it in a way that works for you and you keep it up to date and then lets you easily generate what the IRS or your tax organization wants from you, so much the better. Now, the software that I use actually generates a Schedule C, which is what the IRS asks for, and makes me categorize my expenses the way the IRS wants me to, which makes tax season so super easy. Like I said, I'm shooting a video about that. Sign up to taraswiger.com/starshipbiz, but that's what the term accounting means. Now, the next term we're going to talk about are P&Ls. Have you heard people talk about P&Ls? People are always saying P&Ls. P&L stands for, the P is for profit, the L is for loss. A P&L is simply a sheet of paper that lists your profit and your losses. And in this case, what they mean by that is everything that came in and everything that went out. Usually grouped by section. So like by type of income stream or by type of expenses like utilities, rent, web hosting, or advertising. So depending on the kind of business you have, you might generate a monthly P&L, which helps you see, was this month profitable or was this month not? Like, did we have money? Did we make more money than we lost this month or not? Now, this was the first accounting financial statement I ever worked on because my first post-college job was as the manager of a paint your own pottery studio. The owner lived hours away, and so I ran the whole thing, hired, fired, and every month had to generate a P&L that I sent to him. So this is also true if you're working with investors or if you want to talk to your spouse or your partner, or if you're in a business partnership with somebody, you need a monthly P&L so you both can see the kinds of money that's coming in and the kinds of things you're spending your money on. So back in 2005, when I was the manager of this paint your own pottery studio, I put this together with pencil and paper, and then I would get out my big computer and type it up. All I did was I totaled the sales, of which we ran a daily report of at the end of each day, but I gathered up the 30 or 31 days of sales, added them all up. I gathered up the bills, including the payroll. I added them all up. And I put it together on a piece of paper that said, here was the profit, here's like the sales, and then here are the areas of expenses. And then if there's profit at the end of the month. So the owner of that shop had access to the bank accounts, but a bank account will just show you cash flow, the money that's flowing in, the money that's flowing out, and if you have any left. And of course, if you choose to spend that money on anything extra, it's going to take away some of your cash flow, where the P&L shows you the areas where the money was spent. Now, not every business needs to do one, but when I ask you for things like I did last week in that survey on your income, how much did you spend last month and how much did you earn last month? Having a software that generates a P&L or that you can just open up and see your P&L is really, really, really helpful. So people struggle with the question of, should I apply for this craft show? The booth fee is really expensive. Should I pay $10 for Facebook advertising? Some of these questions can be answered by looking at your P&L each month. Now, next up, and by the way, I don't like generate and print a P&L in my own business, right? I just open my app and look at it. When I was doing it all in a spreadsheet, I would just import the numbers, total them up, look at the two numbers, the income, the expenses. All right. And I would also look at what areas the expenses came from. That's what a P&L tells you. If you're working with anyone else in your business, it's really helpful to have a P&L so you can easily talk about the numbers. They're all gathered up and you're not asking people to like sort through your spreadsheet. But that's one that I get questions asked about a lot. What's a P&L? That's it. Now, the next three are super important for you to know in your business. The first is gross income. This is all the revenue you've taken in a time period. Now, that's it. Gross income means all the revenue you've taken in, all the sales you've made, regardless of expenses. Now, the reason why this one is so interesting to me is because this is how many people on the internet express the size of their business. So they'll say, I have a six-figure business, which means, by the way, six figures is 100,000. So anything over 100,000 would be a six-figure business. I actually found a couple years ago, I was introduced to another teacher and I went to her website and was reading her about page. And she said, I built a six-figure business on Etsy, or a six-figure Etsy business, which could mean that she's, what I think most people take that to mean, is that she's earned $100,000 usually per year. So usually your gross income is expressed for the year. But I did a quick perusal of her Etsy shop and I realized based on her prices and on the number of sales she's had, that actually what she built on Etsy, and then I went back and I was like, well, that doesn't pan out. That she says she's built it on Etsy and I can see her Etsy shop. And I went back and I read it again and I actually read that she said, I've built a six-figure Etsy business over the past 5 years. Then I realized she meant that she had sold $100,000 total over 5 years, which is around $20,000 a year. Not shabby at all, but not exactly what I expected when I read that number. So it's not a lie, it's just a tricky way of stating it. And I think knowing that gross income is different than what we'll talk about next, which is net income, it can be vastly, vastly different. So it's something I want you to be aware of. You can absolutely express the size of your business, if you were ever talking about the size of your business, in gross income, which is the total sales you've had. But then there's net income. Net income is where you take the total amount of sales and you subtract all of your expenses. This is the actual amount of money that a business makes that you, if you have a sole proprietorship, could keep. Now, for many handmade businesses, this is going to be a much smaller amount because obviously you have to buy supplies, you have to pay website hosting or craft show booth fees, and everything else you have to spend money on in your business. So in every business, net income is not the same as gross income. Every business has expenses, so net income is always smaller. The interesting thing is to realize that every business is going to be different in the degree of difference between the net income and the gross income because everybody's expenses are different. So in a business like a comic book shop, you are buying the thing you sell at 45% of its retail price, right? So its wholesale price is 45% of its retail price. So your net income is always going to be less than 50% of your total gross income because of your cost of goods sold. We talk about cost of goods sold in the class Pay Yourself, but that's just the money you're spending on the thing you're selling. So now, just a quick overview, like a couple of examples. For many handmade businesses, the net income is much smaller than the gross income because of the expenses. So for example, a business that has $100,000 in gross income might have a net income of $20,000 or a net income of $80,000. It depends on what their expenses are. And you don't know that unless they tell you the expenses. In your business, you don't know that unless you know and track all of your expenses. And this is why it's so important to know and track your numbers, because you might look at all of your sales, if you import them or you total them up on Etsy or eBay or PayPal and say, wow, my business has sold tons. Why don't I feel like I have any money? I hear this all of the time. And the issue is because you're looking at your gross income and not your net income. Now, a number that explains the difference between the two of them is your gross profit margin. Now, this is the most interesting number to me, and this is a number I've just recently started thinking about and using as I'm talking to people about their own profit. So bear with me. Your gross profit margin expresses your profit as a percentage of the total sales generated. This percentage allows you to compare the profits of businesses of different sizes because the results are measured as a percentage rather in raw numbers. So I heard somebody talking about their business, and this was a giant business, right? And he was saying he grew his business from 3 million to 60 million and from a gross profit margin of like 8% to 11%. Meaning that not only did it grow in sales, but they actually kept a bigger percentage of it. So how you would do this number is you would take your net income and divide it by your gross income. In other words, what's the percentage of money your business lets you keep? Like what's left over after expenses as a percentage. So let's do a couple of examples. The examples I mentioned earlier. If your net income is $20,000 and all the money you took in is $100,000, then you have a 20% gross profit margin. You get to keep 20% of your sales. So this helps you forecast or figure out what you want to make in the future, right? If right now your business is making $200 a year and you want it to make $10,000 a year, and 20% is your gross profit margin, that lets you figure out what are the total sales you need to make. And that can help you figure out your marketing and your strategy and all kinds of things. Now, in a business that makes $80,000 as the net income with a gross income of $100,000, they have an 80% gross profit margin. And I want you to think about that. The difference between the 20% gross profit margin and the 80% gross profit margin means you actually get to keep and take home so much more money. This is really important to look at in your own business because people get all tied up in sales. I need to make more sales. I need to make more sales. But if your gross profit margin is really tiny, then you would have to increase your sales tons in order to make a little bit more money. So to increase the amount of money you make and in order to pay yourself, you could increase your total sales and keep your gross profit margin the same, or you can increase your gross profit margin and make more money even while keeping your sales the same. Now, there are a bunch of ways you can do this, and we talk all about it in Pay Yourself. I also walk you through actually doing these numbers in your own business, knowing your individual profit margin on one product, and knowing your business's break-even point. We talk about all that in my upcoming class, Pay Yourself, which if you are interested in, you can sign up at tarswiger.com/pay and be alerted when it comes out. But remember, Pay Yourself is also a part of the Starship. You get free access to Pay Yourself if you're a Starship member. Starship opens even sooner. So you can go to tarswiger.com/starshipbiz to learn more there. But I want you to be thinking about this idea of gross profit margin because this is why your business is not comparable to other people's businesses. So when a comic book shop, for example, I know because I've been doing a lot of research on it, I told you that their cost of goods sold is usually 45% of whatever their earnings are. But then they also have rent, and then they also have electricity, then they also have marketing, then they also have payroll. And so a healthy margin for a comic book shop, from what I've read, is anywhere from 10 to 15%. And so a comic book shop can make more money, not by just increasing the number of sales, but increasing that profit margin by maybe hiring fewer people and the shop owner actually working there more himself, by spending less on marketing, by moving to cheaper rent, by improving their over ordering, by maybe ordering things that have a bigger profit margin than individual comics. So you see there are a lot of ways they can increase your gross profit margin, which would increase the amount of money the owner took home, other than just getting more people in the shop. And the same is true of your business. So I work with businesses whose gross profit margin is anywhere from just 10%. Somebody who has super expensive supplies in order to make their thing, their profit margin will be lower, to somebody who's like a service provider whose gross profit margin might be 70 to 80% because they don't have to spend a lot on cost of goods sold. It's more about the time that they spend. So their profit margin is bigger, but maybe the time investment is bigger. So that's why it's not comparable. Every time anyone takes Pay Yourself, they ask, Are these numbers good? Is this okay? Is this profit margin enough? And the answer is always, it depends on you and your business. So some businesses can't get beyond a 10 or 15% profit margin, gross profit margin, because of how their business is structured. Retail shops often can't get above a 15% gross profit margin just because of the expenses of having a brick and mortar shop. So you don't want to compare a business like that with an entirely internet-based service business, which might have a 70% gross profit margin. Those sales, those numbers, those results are just going to be totally different. That's one thing. You can't compare yourself to other businesses. The other thing is, once you know these numbers, you can then make decisions about what you change. Maybe you need to focus on marketing, reach more people, have more sales because your gross profit margin is fine. Maybe you need to work on your expenses so that your gross profit margin can increase and you can spend less on your business. I teach you how to do all this math and also lots of suggestions for how you can improve the profitability of your business in my class, Pay Yourself. You can sign up at taraswiger.com/pay to learn more. But if you sign up at either of those locations, either at taraswiger.com/pay or to learn more about the Starship, taraswiger.com/starshipbiz, either one of those places, you're going to get my newest tutorial where I'm going to show you my favorite accounting software, where I look at my profit and loss and how I see all that and how easy it is to export that for your taxes. So if you are kind of in tax crunch season, as I know many of us in the US are, I'm going to walk you through using that in a video tutorial. Sign up at either one of those places. I hope that these accounting terms now make more sense to you. I would love to hear your questions or your concerns. Moving forward in the podcast, we are going to not just talk about definitions, but we're going to talk about profit and value and pricing, all for the month of March. So I'd love to hear your feedback on this. Thank you so much for listening, and I wish you a super profitable and enthusiastic day.